Let's get a preview of the big economic news for the week ahead. Head of Investment Consulting Strategy at Alex Forbes, Nadir Thokanhas, speaks to us now. And thank you so much, Nadir, for your time. Good morning to you. So the big economic data for the week is inflation numbers, which are coming out on Wednesday.
Yeah, good morning to you and to your viewers. And without a shadow of doubt, the big news this week is inflation coming out on Wednesday. And that's obviously the driving force behind all market movements at the moment. We saw US inflation coming in last week. Even though we saw an easing of the headline inflation number to 8.2%, we're still seeing that core inflation number kind of accelerating to a 4-decade high. So, there's still a lot of inflationary pressures within the US. That's obviously resulting in expectations of further interest rate increases. We've seen our inflation easing to 7.2% in South Africa, but that's still obviously way outside of the Reserve Bank's target band of 3 to 6%, and way above that midpoint of the target band that the Reserve Bank is expected to target. So, or indicates to the market that they target, should I say. So, we're really under, a lot of scrutiny with regards to interest rate directions, tightening of monetary policy. This is obviously coming at a point where economic growth globally is slowing down. We saw the IMF release their report last week of their expectations for economic growth. And unfortunately, it's not a great picture. We're talking about, Europe, actually certain European countries going into recession or going into negative GDP growth next year.
Right.
We're talking about the overall global economy, only growing by 2.4%. That's a downgrade. We're seeing South Africa's economic growth numbers being downgraded to under 2%. So all in all, this tightening of monetary policy not coming at a good time. So a big focus on that inflation data and what Reserve Bank will be doing.
A big focus on that indeed. But also, can we just talk about the retail numbers coming out on the same day on Wednesday and just discuss them also in the context of Pick n Pay and Clicks releasing earnings updates this week?
Yeah, indeed. So, we know that South Africa has a big unemployment problem, and we haven't been able to resolve it for the better part of a decade now. So, these are obviously things which weigh on things like, retail sales. And we know that South Africa is a very consumption-driven economy. We know that there's been a lack of investment within our economy. As a result of this, we've seen very pedestrian growth over the course of the last decade. So something like retail sales is obviously critical to Pick n Pay, to Clicks, to, pretty much all of the retailers. And essentially, you see it in these companies' results announcements. The ones doing well are winning market share and stealing market share away from others. If you think of Clicks as a phenomenal business that is able to generate very robust earnings growth against a very weak macro backdrop and pretty much, no rand hedge, in their earnings, or very small part of rand hedge in their earnings. So, they've been one of the winners in terms of winning market share. Pick n Pay has kind of been a mixed bag. They went through a tough time. They started emerging out of that tough time and, consolidating their strategy, focusing more on the lower end consumer, rolling out a lot more Boxer stores, trying to make their Pick n Pay stores more focused. So all in all, to me, a big number that is coming out. We know it's a big driver of our economy, but, we still expect ongoing weakness there, given that the South African economy is really just stumbling along.
Absolutely, Nadir. I also want to place focus now on, the rand, the oil price, US inflation data, which was released last week, and why it's significantly important, to know this and why it matters to us. But also at the same time, mining production numbers and manufacturing PMI numbers that were also released last week.
Yeah, so quite a lot to unpack there. So let's maybe just start with the oil price and the rand. So, we know that the oil price has been under, intense upward pressure through the course of this year because of the Russia-Ukraine war. I think, all the viewers will be, aware of that and would have felt the pain of that at the petrol pumps. So we then saw a big retracing of the oil price, but now we're seeing the oil price bouncing back hard again because OPEC, which is the Organization for Petroleum Exporting Countries, and OPEC Plus have come to an agreement to cut oil production by 2 million barrels a day. So obviously the market has reacted to that. It's a big supply side shock. And we've seen oil prices started accelerating back towards the $100 a barrel mark. And at the same time, because of all this volatility we've seen in global economic conditions, because of all this fear we're seeing globally, we're seeing the dollar strengthening, remarkably, not only against the rand, but against pretty much all currencies. The rand has obviously been a big loser, against that. We've had accelerating load shedding that obviously hasn't helped sentiment, but the dollar has been on a rampage, and that's meant that the rand has weakened even further. So now we've got this double whammy of higher oil prices and a weaker rand, and that obviously feeds through into inflation, feeds through, unfortunately, into probably higher, petrol prices at the pump next month, and that's obviously not great news, and something that the Reserve Bank is going to be considering, when they make their decisions around interest rates, and probably going to see significantly tighter monetary policy, and that's on the back of what we're seeing in the US. If inflation is high in the US, the Federal Reserve has no choice but to put the brakes and try and slow that down by hiking interest rates. Now, if the Federal Reserve is hiking interest rates, generally central banks around the world follow suit. And the reason they do that is because, to some degree, you've got to protect your currency, you've got to protect outflows of financial capital from your economy, because that results in even further currency weakness and even more inflation. So, why we should care about US inflation is because it's the direction that the Federal Reserve has to go with interest rates. And that's ultimately then, what central banks around the world have to follow suit with in terms of tighter monetary policy and higher interest rates.
Absolutely, Nadir. Just a mention to our viewers, I'm sure you've heard the siren again. We have a focus this morning on hijacking. Every 22 minutes, a car has been hijacked. That siren being assigned to you, our viewer, this morning. That unfortunate incident has taken place in the country. Hence, we've heard the siren. So also just to make you aware, Nadir, so you're not perplexed by the siren. Unfortunately, that's the country we live in. But in my last question to you briefly, if we may, just talk about the investment meeting currently happening in Saudi Arabia. Briefly, please.
Yeah, so look, at the end of we touched on it earlier. South Africa has had a complete lack of investment, or certainly not enough investment in its economy to tackle our 35% or 34% unemployment. So it's really an investment drive going to oil-rich nations which are looking to diversify out of petrocarbons. Trying to position South Africa as an attractive investment destination. We know that a lot of auto manufacturers, have taken up investment in South Africa. In fact, in our manufacturing numbers, the auto manufacturers was the one kind of shining light in terms of manufacturing data for the last month. So, that has been a relative success story for South Africa. And we're trying to, attract further foreign direct investment from, cash-rich countries that are looking to diversify outside of the oil sector. Obviously, there's a lot of concerns around the environment globally, and Saudi Arabia has publicly said that they're looking to diversify their investment portfolio. So South Africa trying to take advantage of that. We really do need more significant investment in our local economy in terms of foreign direct investment, and we hope that that can continue to trickle in.
And I appreciate you speaking to us this morning. Nadir Thokanhas, Head of Investment Consulting Strategy at Alex Forbes. Thank you so much for your time this morning.